Hello and welcome to this lesson. So in this lesson, we are going to look at the trading example of this strategy. So I'm watching the New Zealand USD daily chart. So this is the daily chart of the New Zealand USD. And actually the origin of this setup is this liquidity down here that was taken out. So once the market took out this sell side liquidity, we're going to drop into the 1 hour chart to look at the order block in more detail and the order block setup that formed here, so that we can see how that setup actually went. So from here, actually, we just drop to the 1 hour chart so that we can look at that setup example in more detail. So let's drop to the 1 hour chart. So this is that liquidity that was taken out on the 1 hour chart. So you can see how aggressive actually the market came down to take out those liquidities. So if I just zoom out a little bit, you can see it is actually also the previous week liquidity. So this is sell side liquidity. This is actually sell side liquidity. So this is sell side liquidity that was taken out from the previous week. So this is previous week liquidity taken out. So once the market took out this sell side liquidity right here, this is on Tuesday. On Wednesday, we got a confirmation of an order block, which was now used to drive market higher. So basically, the order block I'm referring to is this this candle right here, created at 1 a.m. on Wednesday. So once that liquidity was cleared out, so you can see even there's another secondary level of liquidity that was taken on Wednesday at 1 a.m. right from the order block, cleared out. So this last down close candle before the market moved aggressively away from this level of liquidity is our bullish order block. So basically, if I outline that, that is our bullish order block on the 1 hour chart, and that is the order block we're going to use now to frame our setup. So this is a 1 hour order block. So I've drawn the high of the order block. So maybe I can capture the exact high, which is the high is 0.59384. 59384. So that is the high of the order block. So maybe I can indicate here order block high. So this is our entry point. So that is also our entry point. So I'm going to demonstrate an example here of a setup. Hypothetically, if you took the setup above that high, and of course, like we said, the stop loss comes below the low of the order block and maybe just a few pips below it. So basically, if we take a hypothetical entry right there, so that is our hypothetical entry right on that candle's high. Then we place our stop loss below the low of that order block and then maybe a few pips below it. So you can see that is what you get. So basically, you can see how many times actually this market, so maybe if I can see how many times actually this market comes and retests that point. So now, because this is a day trade, you want to make sure that your entry comes in at either New York session or London session. So for example, this is New York session, this is 9 a.m. The first time we hit that order block was at 6. So preferably you want your entry to come either at 8 a.m., 9 a.m. Those are the times you need to focus on for entries. So I'll say our entry came in at 9 a.m., which is New York time. So that is 9 a.m. That is our entry. And then, of course, you want to target the nearest liquidity. So we had this high here, which was the initial high of the day as our initial high or liquidity. And then, of course, above this high, we had this imbalance. And then we had this liquidity up here, which was Tuesday's high. So I'll say these are the two main targets that you want to aim for. So for example, if you entered at that order block, then your stop loss is below that, then it means your first target should be here, which is 1.28R. And then your second target should be up here. So basically, ideally, the final take profit should be here, which is about 2.87R. So right here you take partials. So take partials, and then this is final TP. This is the final take profit. So that is the idea behind that setup, or that order block setup. So remember to take partials always as you enter positions. Make sure that you're taking partials. So that is the setup. It's a day trade. It's a quick day trade setup because you can see actually the first partial was taken out during the same day, but then the final take profit was hit the next day at this is at 9 a.m. So basically that's what a day trade is all about. So basically sometimes the market might overflow to the next day or to the next session, which is okay for a day trade setup. So basically that's the example. We're going to look at another example. So thank you so much for watching. I'll see you in the next lesson.